To have you guys all here. Peter, let me just start with you. A lot of jaw-dropping things about the action today. What do you think investors need to know?
Well, this is sort of like a catch-up trade. The bond market has been telling you they've been worried about the economic impact of this virus for the last month and a half. And even before that, the 10-year yield falling was worried about something with growth.
But the 10-year yield's always worried. I guess, how bad do the growth numbers look today that it justifies everybody else finally catching up to this point?
Well, at least in the U.S., you're talking now GDP growth of probably at best 1 and likely less. China's economy is obviously going to contract in the first quarter, and you're going to have probably 9 out of the 10 biggest economies in the world that will show at best no growth in the first quarter.
And Vahan, today the most important, or I guess over the weekend, we really saw this move going back to late Friday, where the cases outside of China continued to climb, and people just got this sense of coronavirus is spreading and it may be coming to my doorstep. This morning we heard from Warren Buffett, who said you have to take the long-term view with these things. They come and go. There's always a crisis. We look to buy good businesses and so forth. Is that, not... Can you be that long-term oriented? I guess you can if you're young enough or you've made your career like Buffett's. But on a day like today, when people are trying to figure out what growth dynamics in their supply chains might look like, what's your advice?
Well, I think the market could go lower. I mean, keep in mind that we had an incredible year last year, so we're still not that far from our highs. But we've known for a while that we have to see a slowdown. This coronavirus thing has been going on for a while. And as Peter pointed out, there have been a lot of other markets like the bond market that have been telling us that a slowdown is coming. Oil prices are way down. Gold is up. Copper prices are down. So I think it's been a bit weird that stocks have done so well compared to everything else.
When you both say a slowdown is coming, do you mean a first quarter 1% GDP number, or do you mean something more serious than that?
It's an I don't know answer, because we don't know how long this goes on. But you look at last year, growth around 2%. Earnings were basically flat. So now you can say maybe at best we'll get 2%, probably less than that, and earnings expectations that are still very high relative to what I think we'll likely see.
And so that's why you're saying behind the big head scratchers why the stock market has done so well. But then if the expansion continues, then, I mean, that's a big question, right? You can say a slowdown is coming, it's priced in, but it's to what extent, how severe?
Well, I always tell people that we will definitely have a recession. It's only a question of when. We always have recessions.
Right.
So I'm not expecting a recession this year. I think we can still get by this. I think the U.S. economy will still grow this year, probably less than what it did last year. But as far as a recession goes, I'm not expecting one this year, but eventually we'll have one.
Fred, let me bring you in, and maybe you can help us kind of pinpoint the next hot spots that we should be worried about globally. Everyone's looking for how this spread in Italy. There's a lot of concern about how all these different countries are going to manage it now that China, which is so authoritarian, couldn't even really get its arms around it. What are you most concerned about?
Well, Kelly, thanks very much for that. I mean, Italy is frightening, particularly because it's part of a Europe with no borders. You have a shutdown of Carnival in Venice. Whoever thought that would happen because of something that broke out in Wuhan.
Right.
You do have, of the top 10 economies in the world, all of them are slowing, 3 of them in recessionary territory. And the only thing that surprises me, and I wrote in my CNBC column recently that I thought that global investors were overly complacent. Now we have to see, are they overreacting? But the fact of the matter is it's not just coronavirus, it's the slowing economy. And on top of that is global debt, $244 trillion of global debt. That's a record. And it's the highest level of public debt since the end of World War II. So investors have been betting on either fiscal stimulus or monetary stimulus to bail them out the way it has over the last decade. But I just don't know whether the forces or work are going to make that the bailout that they're going to get. I agree that things are going to go down. The question is how far.